SCHD is currently up 0.3% on the year. Most dividend investors aren't very happy with this, especially when you compare it to the S&P, which is up 22% this year. In this video, we're going to talk about 2 reasons on why SCHD is underperforming, and we're going to talk about why I still think it's a great dividend ETF. And quickly, before getting into the reasons, if you guys like the videos, please make sure to like and subscribe as it really helps the channel out. The first reason why SCHD is down is because of interest rates. As you can see, interest rates rose throughout the whole 2022, and because of that, it made it more expensive for companies to borrow money, and because of that, they grow slower. This, along with some other things, have really hurt some of SCHD's biggest positions. These include Texas Instruments, which is down 6% this year, and Pepsi, which is down 5.5% this year. But you might be wondering, if that's the case, why did the S&P go up 22% while SCHD basically stayed flat? And the main reason for that is the Magnificent Seven. If you don't know what the Magnificent Seven is, the Magnificent Seven is Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. These 7 stocks are the 7 biggest positions in the S&P. Combined, they make up 29% of the S&P's market cap. Most of the Magnificent Seven stocks have done incredibly well this year. The 2 biggest winners being Meta, which is up 175% this year, and Nvidia, which is up 251% this year. Looking at this chart, you can see how much they contributed to the S&P's gain. As you see, the blue is the other 493 stocks in the S&P, and the orange is the Magnificent Seven. As you can see from this graph, the Magnificent Seven way outperformed all the other stocks in the S&P. It outperformed it by so much that if you would take the Magnificent Seven out of the S&P, the remaining shares would have only returned you 4.5%. So you can see that most of the gain from the S&P came just from the Magnificent Seven. The rest of the stocks didn't really perform that well. The second reason why SCHD is underperforming doesn't actually have to do with SCHD at all. It has to do with how expensive the S&P has gotten. As you can see in this chart, the PE ratio for the S&P is now 27. This is much higher than what it's been in the past year. And so what this means is that the S&P isn't actually growing. It just means that the positions are getting more expensive. SCHD, on the other hand, has a price-to-earnings ratio of 18. This is obviously much lower than the S&P's. And the reason for this is because of what they invest in. As you can see here in the highlights of what SCHD does, it tracks an index focused on the quality and sustainability of its dividends, and it invests in stocks selected for fundamental strength relative to its peers based on financial ratios. What this means, they try to find stocks that are slightly undervalued that also have a high quality and sustainable dividend. So that is why SCHD doesn't have as high of a PE ratio, and that is why it's slightly underperforming. With all that being said, I still think SCHD is a great dividend ETF. The first reason why I think SCHD is a great dividend ETF is by just looking at its 5-year chart with dividends included compared to the S&P. If you add dividends, SCHD has returned 75.9% in the past 5 years, and the S&P returned 80%. So you can see SCHD is only lagging by about 4%, and at times it was actually beating the S&P during 2022. Another reason why I think SCHD is a great dividend ETF is because of their dividend growth. If you look at their dividend in 2013, they paid $1.05 per share, and in 2022, they paid $2.66. So they've obviously grown their dividend quite a lot. And if you look at the compound annual growth rate, they've been consistently increasing their dividend in the double digits every year, besides for 2021 and 2022. But in both those years, they still raised the dividend. In 2021, they raised it 8.7%, and in 2022, they raised it 3.7%. It's also forecasted in 2024 that the Fed will cut the interest rates. If they do, I think SCHD should have a very nice year, and it should rebound quite nicely. Let me know what you think in the comments. Let me know, do you think SCHD is a good dividend ETF, or are you buying something else?